It's kind of funny with the stock market because right when people really feel safe, something really bad can happen. And that is still what is being suggested on the bigger time frames. We did talk about the fact that the only thing, if you paid attention to last Saturday, that we said about the SPY is this could be a blip. I could even run that clip, but I'm probably not going to, just because you can look back and see we said this might be a blip because we noticed that the MACD was able to confirm getting a red bar on that histogram, but the price action here, this bar from last week, was not able to cross through that 9-day moving average, which just tells us that something could be going on here. When you flip over to other things, this was not confirming on the Dow Jones. This was not confirming on a big stock like Nvidia. So we had to pay attention to if there were reversal signals. And real quick, we did catch the reversal signals. We did catch the reversal signals. Don't get it wrong. The 30-minute here did tell us that there was a good opportunity to see a bounce, and we had a huge amount of implied volatility going into the day after the election, and that led to a massive pop. But now I want you to be aware that people are overall not buying as many puts as they were back in these areas with those reversal signals. So we're going to get into a lot of things today. Stick around, because mainly we're going to be talking about how I think this could build up and people could experience some pain, and what I'm leaning towards as far as correction or crash. Let's get into it. So the first thing we have to notice with the SPY is we still have the reversal signals. You still have them, and we talked about the fact that this was not closing below the 9-week moving average last Saturday. We talked about that and said that's why we still have to pay attention if this thing's going to bounce. We still mentioned that we could head up towards 600, and that's what people are sleeping on. The other reason that we know that people are most likely going to get trapped here is because this is all the options market has priced in for the whole month of November, and we're there 9 days. Well, I guess it would technically be 8 days into the month, and that is very worrisome because you have a ton of stocks outside of their monthly expected moves. So that's going to be a big thing to pay attention to, but we're still holding those divergences. They just aren't turning down yet. So we should expect positivity until that turns down. That will be a big signal. And I'd overall be looking for when we actually lose that 9-week moving average. I think that's going to be a big deal. But something that I just needed to point out at the beginning of this video is the Qs were able to go to a higher point. You notice they are reaching up towards that monthly expected move. So positivity is possible here, but notice that we are still making that divergence, and the Qs were mentioned as well, not able to close below the 9. That does happen some of the time, not most of the time. That's not going to happen. Most of the time when you're crossing over on this MACD, you're going to see the price action close below that 9-week moving average, that 9 on any time frame, but it does happen sometimes. And so when that does happen, you got to go, hey, look for a base here. The Qs were able to make some kind of lower or higher low in this area, and we just said the SPY had that divergence, so this was leading to, hey, there's weakness in momentum, and if that news is good, big move to the upside. All right, so obviously that big move to the upside came because people were getting out of European markets, they were getting out of Chinese markets, and they were actually putting money into the stock market, which is very interesting. It seemed like the US stock market, and that seemed like people were pricing in some form of tariffs. But let's go back over to the SPY, because I think the important part for this video is really talking about how this move can start to fail. And one thing to notice here, and why I don't want you to get too bearish in this area, yes, we can turn down at any time, right? These type of moves really get people complacent, and you got to be aware if something bad happens, because that can really take people off guard. But do we have reversal signals here? No, we have squeezing and squeezing and squeezing. That's what you have at this moment. So that divergence down there, great hint. This is where I got out of volatility. That's where the big move happens, and we had a massive move priced in for the day after the election. So that all makes sense. We talked about the fact that you have to always be trading like water. You have to always pay attention whenever you see a little 30-minute divergence here. So what do we need to form in order for this to fall down? This is going to be something massively helpful. If you find this helpful at the end of this little chat here and this next part, please leave a like on the video, okay? Because this is what you need to go down. The last time that we were falling down, why did we start to talk about weakness? It was because of this right here. It was because of Nvidia, and we're going to talk about Nvidia in a little bit. But this gave us enough of a signal to say, hey, there could be some kind of downturn. You get a reaction back into the zone, you fail. right? This is exactly how you want this to behave, but then we made another divergence the other way. Volatility is higher. You should expect big swings in both directions. Volatility being higher does not mean stocks have to crash. Volatility being higher means pay attention when you see a 30-minute divergence that can curl up a 2-hour. And the 2-hour has gotten rid of all those divergences. We're going to get into that in a moment. So what am I looking for here? Well, at the moment, we're looking for some kind of pullback, right? The way that this would set up almost perfectly as far as getting a move outside of the monthly and people really get trapped up here is you actually are able to pull down or consolidate with some price action. You get this 30-minute really close to the center line, you curl up into positive territory and you see a divergence. Now that divergence might be an initial drop, right? Maybe this consolidates a little bit, we see a pop higher, and then we see a little divergence here. So we see this on your MACD. Okay, we're just gonna kind of like think about this like, if this would happen, this is how I'm going to react. So what would this mean? Does this mean this is overall gonna crash down, or does this just mean, hey, maybe the 2-hour is gonna curl down? Well, it would mean mainly the 2-hour is going to curl down, and what's the 2-hour look like? Well, the 2-hour has gotten rid of all those divergences we used to find this drop. So we're going to need to see that again if there is going to be weakness. And because of the weekly scale, I am very much so expecting to see this set up, but this can take time. All right, this can take time. That's why we got to play the price action. We got to play the divergences in both ways. So what we notice here is the 2-hour is way up in positive territory. So is that a reversal signal in some way? Not necessarily. No, we don't have that reversal in trend signal, that signal that says, hey, I can go negative here and start to go to lower levels. We do not have that at this moment. So if we get that little 30-minute move, and then we actually see that confirmed, we actually could see a 2-hour pullback that gets people pretty bearish. And then we could see that just curl up into positive territory, right? We could curl up into positive territory one more time for the 2-hour, and the signal that you are looking for, the exact signal that I am looking for, that everyone should be looking for, are if we make a divergence outside of this monthly expected move. Because that's what we used in the past. We've used it multiple times. We used it in Nvidia over and over and over again. It's worked 100% of the time since August. Okay, so if you want to learn how to trade this kind of stuff, right, see this divergence, right? We see the 30-minute one. That leads to a 2-hour pullback. The 2-hour crosses back up in a swing trade to the upside. We get outside of that monthly expected move. Maybe we go up towards a weekly expected move or something like that. That is what we're going to be paying attention to going forward. This is how weakness can form. Weakness here would be if we see a divergence between these levels, we see a divergence between these levels, and that confirms, and then that is able to turn down that weekly chart. This is exactly what you need to be paying attention to. I'm literally laying it all out in front of you. If you need to learn how to actually trade this, how to actually see those signals, when the confirmations are, and all that good stuff, there is a course down in the description. It is the Using Technical Indicators course. It will teach you everything you need to know about the MACD, everything about the RSI, the important things, the center line, the positive, the negative. It'll teach you about divergences, what they are, why divergences are important to your MACD, to your RSI. We don't just tell you, hey, divergence means weakness. No, we tell you why that weakness is there, why it makes sense, and it will click in your brain right away. You'll be like, oh, that makes so much sense. So get that course. It is 90% off just till the end of November. You only have a few weeks left to get that. 3 weeks and that thing is going away. It is going up in price. So get it while you can at 90% off. It is down in the description. If you want the swing trade course as well, hey, you can get both courses right now for the crazy price of $150. I don't have sponsors or anything like that. So I'm throwing my own sponsorship in there. So what we want to see here is that weakness actually form. Okay, you have to see that weakness actually form, because this could go down, this could go up. We could see that divergence, and then you could get a triple divergence by the end of the month, right? We could do something like this. We could do this and get by that center line, and see that come all the way down. We've seen that in the past, so we should be open to that happening again. All right, that's the main signals. Now you know exactly what you're looking for from these reversal signals going forward into next week. And we're going to get into the shorter timeframes on Sunday. So I highly encourage that you join the channel, right? Subscribe to the channel, turn those notifications on, and join us for the shorter timeframes where we will update the weekly expected moves for the SPY and the Qs and the daily expected moves for Monday. Now the Qs, I don't want to take a bunch of your time, right? I don't want to take a bunch of your time. I want you to go spend time with friends and family. I want you to dedicate yourself to some fun this weekend. If you're dedicating yourself to some learning, I still encourage you go get a good meal. You go do something fun for yourself, because, you know, it's something we don't really get back. You know, spending time with family is much more important than money. I understand money does fund everything and money's very important, but at the end of the day, your family and friends are what are the most important thing. And that's what I will be doing this weekend. I am going to spend some time with my wife. We are going to get a babysitter and go have some fun. That's what I'm going to do. But I am going to look at charts a little bit, and that's what I'm doing with you guys this morning. So for the Qs, you're looking for the similar look. You're looking for the same thing. The 30-minute here, you notice we're getting that squeeze behavior where your MACD is just turning straight down while the price action is going up, which says, hey, some kind of consolidation would be necessary, but this can just keep squeezing. So something we want to pay attention to for the Qs is very similar, and we're just going to talk about the 2-hour again. Just really talking about, hey, this could pull down in some way. Maybe we go up first, we pull down, then we curl up, and we see this little wave in here that tells us, hey, there is weakness in momentum outside of a monthly expected move. Why is that very important to pay attention to? And thank you for continuing to watch the video, because now we're going to talk about something different. The monthly expected move. This yellow line here, you see how far down that yellow line is. You could end up all the way down to 449.04 by the end of November, and it would make 100% sense. Because this is a bigger zone. This is a 68% zone. You have a 32% chance to land out here, a 32% chance to land down here, but you have a 68% chance to land here. So if I see reversal signals above that yellow line, the percentage to go down from there is higher than to go up from there. And that's very important to understand. The other thing is you have to know what you're looking for. You have to know that there is weakness there. It does not mean, hey, if this thing goes above that line, then it has to come down. No, you want to see that weakness in momentum. That is what we teach in the overall course. Now, this is where I wanted to talk about the Qs in a different light. What did we say for the past few weeks now? If we're going to get some kind of basing out and make that move higher and take out this high, then I'm looking for more of a corrective move here. I think we could see a corrective move. We could make all these divergences. We could make that 2-hour divergence. We could do something like this. We see the weakness and we pull down. And then people are really convinced this thing is crashing down. And then maybe it does, you know, it still can. If those weeklies cross, I would very much so be aware of that. But if those weeklies are able to base out, if those weeklies are able to form some kind of daily 2-hour, 4-hour divergence in here, and we end up at the bottom of our channel, we get some kind of corrective move that corrects us by, say, let's say we get up to here and we correct by about 9%. Well, then we can head still in the upward direction, and that is very important to understand. Yes, we are saying that this is approaching an all-time high. This is approaching probably an all-time high that we're not going to test for a long time if we start crashing down. But we have to be aware that this can turn back up. Trading like water is something that will really help you out. Remember, we said last week, if you're really, really bearish, you're really, really bullish, give yourself that 1% chance, that 1% of thinking that keeps you aware of how you can get screwed. We have a whole section in the course of how to not get screwed. We teach you how to actually manage your trades in real time based on each time frame that we go over, and it is very, very helpful. It has helped me more times than I can even count. It is something that not a lot of people do, and if you learn how to just do that, if you take the course right now, you do that, you're going to be better than probably 90% of traders out there. Because 90% of traders just use stop losses, leave them. The options market, the market maker, they know where that option is sitting. They go, they take out your sell level, and then they shoot the market higher. That's what happens all the freaking time. That's what could be happening right now. Imagine people had stops here, and this is just a move up, and then this thing comes down. That could be happening right now. So you have to know how to manage those trades. We don't see the shorter time frame reversal signals. We're going to talk more about this as we get weekly expected moves, because that'll really help us out. If there is a weekly expected move just outside of this or a little bit outside of this, that will help us out going forward. This can continue up though. You have to realize that this is curling up again into positive territory, very strong. So the chances of this continuing next week, even with some kind of pullback or something like that, is high. We have to wait and see when that macro signal gives us the next opportunity, and we're going to use the shorter time frames to find that for you on this channel. So tune in every single night to our videos. But one thing we notice is we did take out this high. What have I been saying for weeks about that? Well, that is mostly going to lean me towards a corrective move that might actually end up going higher, or a corrective move that gives the Qs a lower high. That is what we're looking for now. I think the Qs still have that opportunity to make that lower high by spring of 2025, and we'll see that look where the SPY goes and makes that divergence again, right? From this level, maybe makes a divergence on the weekly scale here, while the Qs can't catch up. And I think that's something we're really going to pay attention to going forward. Please tune in to Sunday's video so we can go over the shorter time frames and give you those weekly expected moves, even though we're pretty much mapping out exactly how you would see weakness in this move. And it is good to pay attention to certain stocks. It is good to pay attention to multiple stocks because they can give you a hint of weakness that is coming. And we already talked about AMD. AMD has confirmed a monthly divergence. Okay, so AMD is still saying, hey, I'm probably going to head down more likely than I'm going to head up over the next 12 to 24 months. So what does that mean for a stock that's similar like Nvidia? Well, Nvidia never curled down on the weekly scale. Nvidia has earnings coming up. Nvidia has divergence before that earnings. Now, earnings can be a 50-50 flip, but if we're experiencing weakness and Nvidia has anything to say here, and Nvidia actually does drop, Nvidia is such a big stock in the market that you really need Nvidia to curl down on that weekly scale to actually head down in the, it actually had negative head down in the actual market because it's so freaking big, all right? So this is something you really have to pay attention to, is the fact that Nvidia never confirmed that, and I keep hiccuping, my goodness. So what can we pay attention to for Nvidia? Well, you see this 30-minute. We see that 30-minute was actually moving sideways. What do we like to do on a lot of these big moves up? Well, a lot of the time you see this staggered blue line. That is a 5-day moving average on the shorter time frames. When you see a massive move up, a lot of the time you like to gravitate towards or pull back to that 5, get a retest of the 5-day moving average, and then see what happens. So something we could actually notice here from Nvidia is, what if Nvidia sets up all the reversal signals first? And what if Nvidia gets outside of a monthly expected move? Weirdly enough, Nvidia, I believe, is one of the stocks that is not outside of a monthly expected move yet, but it could happen this week. We could see this go like that, turn back up, turn down, and then start to make those 2-hour divergences we're talking about. Now, one thing with Nvidia that you have to notice here that's different from the SPY and the Qs is Nvidia still is holding the divergence point a little bit. You have to be aware that this can be a weaker move than the SPY and the Qs. So this is actually saying more weakness here because you have these highs in here. This is what we used in order to find this drop. And then we use the SPY to say, hey, that has a good chance to bounce. And we really thought, hey, that could be a lower high, but you have to be aware there's a huge amount of implied volatility. So if this does cross down, you do see it is holding the divergence points. It is very flat. So most likely we are going to make some kind of 2-hour move higher to show us that weakness. And maybe that move takes us outside of a monthly. And then we have all the percentages pointing towards, hey, this weakness in momentum is going to lead to a downturn. If that downturn turns over weekly charts, that would suggest that things are going to go down a little more rapidly. And then we'll find those basing out signals if it is just going to be a corrective move. I will say this about volatility. Something unfortunate is we've been talking about the fact that, hey, if this daily crosses over, what can happen? A squeeze. What happened? The daily crossed over and we're getting a squeeze. Okay, so the only reason that this is a little unfortunate is you got a huge gap down. Now, that's one thing to pay attention to, though. You have a huge gap down, so most likely we are going to go and fill that gap. A lot of gaps fill within 5 trading days. So what if this sees some kind of big reaction? We'll pay attention to that. The shorter time frames here not looking like too good of reversal signals, but you're still holding that crash signal, which is the 50 crossing the 200. Okay, you're still holding that, and this has been holding for quite some time, and we have not experienced a big correction. I think a bigger correction would be useful here, if not something more than 10%. But that's what I want to pay attention to for volatility. One thing for volatility you have to notice is this can be a bullish move now, a very bullish move, because the weekly has crossed over. Okay, so we have to be aware that these signals do not have to play out to the downside. We do not have to cross down on weekly charts, and we could head up for a few weeks here, and then we're waiting to see. Most likely, what did we say was going to happen if you cross over on the daily and cross the 200? Well, most likely you're going to end up down towards 1212. So barring a black swan, most likely we do end up towards 1212 for volatility. That is something very key to understand, is when this thing is going negative, that usually means the squeeze is starting. This is something we've said here. This is something we said here with the reversal signals. This is, I don't think we had a channel back here, but right here we said it, right here we said it. And we were right both times. Right here, I believe we said that that was going to reject because we had little reversal signals. So what we really want to see here is basing out signals from volatility. We're going to go over those shorter time frames for volatility more so as the week progresses this week. But I wanted to just say that volatility still is in an area where that crash signal is holding and people are getting very complacent. So be very, very cautious. It does not mean, right? It does not mean you can't take upside plays. It just means those are going to be shorter time frame plays. And you really have to pay attention to weakness to the upside, because if those weeklies curl over again, it's going to be worrisome. The last thing I wanted to talk about was TLT, and TLT actually showing you some daily divergence down here. It actually is showing that daily divergence just slightly there on the MACD, slightly on the RSI. It's very, very slight, but we were talking about how sometimes in trades, this is why managing the trade was rough here. You guys know this was my trade, went wrong, and that happens to every trader, and I will admit when it happens to me. But this doesn't mean that I'm wrong. It means my timing might be off. I might be right in saying, hey, over the next few weeks, this will be at higher prices. But I'm wrong for the time being. So I might be right, just not right now. And that's why managing trades is very important. But this one, not able to manage because of a massive gap down, seeing if that can turn back up. I did scale in again once I did see the reversal signal pop up again, which actually looks better on the 4. But when this 2 hour curled up, I go, okay, that thing can go positive. All right, I'm scaling back into this again. So I actually still have a great position now for TLT because I bought it here, big drop, bought it here, evened out, and now we're pretty much right back to where we started. So good stuff there. But look at the 4 hour divergence. Why are we about to see people go into TLT very, very rapidly? Is this just a repositioning? Is something bad going to happen? That's something we need to understand. And if everyone is touting this right now, and I think this is good at the end of the video, everyone is touting this right now. If Trump is really, really bad for inflation, then why are we still cutting rates? Why are we still cutting rates? I actually think that this move from yields upward, it was very, very bad for banks. I think the Fed realizes that that can put banks under a ton of pressure, and I think they're reacting. And I think Jerome Powell should be very, very worried about keeping his job with this administration. So I really wanted the main takeaway for this video to be what we are looking for weakness, and I think that could come over the next few weeks. I do not believe that these signals say, hey, the market is a great time to invest for the next 12 to 24 months. I realize I'm always going to give myself that 1% chance to be wrong, so I'm aware of these things not playing out. I'm aware of corrective moves, but this is the exact look. And if there is something that can convince you right now to like this video, it is to encourage other people to see this video as well. Watch the whole thing so they can really get how this market can experience weakness. And if we see this kind of look, it is not going to be good for the market. This move can extend. You are squeezing right now, so it can extend. But overall, we are getting way too excited, way too fast. People are getting way too complacent, way too fast at the beginning of the month. And once we get up past 600, you have to start looking for those reversal signals, because that is what can really, really hurt you. And you're in an environment where it could hurt you more than any stock has ever hurt you in the past, more than my Zillow trade in the past, right? More than anything ever that could hurt you can be coming around the corner. So be very, very cautious. It does not mean you can't take upside moves. It just means be very diligent and aware of the signals you're seeing in front of you. If you see weakness, just like we saw weakness in the downward move, if you see weakness, you have to be willing to react, because this market will become a rip around kind of market. It'll behave like a bear market. And if you really want to get good at it, good at trading in that kind of market, because that is the kind of market that hurts the most amount of people, that course is down there in the description for you. It does fantastic when volatility remains at higher levels. So thank you guys for watching. Really do appreciate it. I hope you guys were able to find this video helpful. Please leave me a like if you thought so. Please do something fun this weekend. Really spend some time with family. You can look at charts with me on Sunday, but go out, do something fun, enjoy life for the weekend. That is my overall actual advice for right now. So thank you guys so much for watching. Really do appreciate it. Have a great, great weekend, and I look forward to talking with you guys tomorrow. Peace.